Okay, so good morning, everyone. I'm Keisha Stewart with Infinite Possibilities. Thank you for joining us this morning. We have an exciting presenter this morning, MTC Federal Credit Union. Scott Baker will be joining us. Right before we get started with the presentation, I do want to announce that in the chat, please make sure all parents and guardians to click the form to sign in so you can be counted for attendance here. This is how we track how to distribute the gift cards to Tanglewood, Berea, and Lakeside Middle School. So all parents that have kids at those three schools are awarded gift cards. So please sign in on the form so we can track that, as well as any other participants that are on the meeting. You can sign in here as well, so we can get your email and contact information to keep you in touch with upcoming meetings and events. This is powered by OnTrack Greenville, and they are so nice to be the ones that will be funding and sponsoring these gift cards to you. So we really appreciate this partnership with OnTrack Greenville. Lastly, I have a last announcement. If any parents or guardians are interested in their students attending a culinary summer camp at Greenville Tech College, please email me, and I have my email in the chat, as well as a link for the Greenville Tech. It's called Adventure at Greenville Tech, the culinary summer camp, so you can see more about it as well and get more information. It's ages 11 to 14 years old. Let's see, and I'm just checking chat to make sure I'm not missing anything. I think we're good. Okay. All right. Well, I'd like to introduce you at this time to Scott Baker. Welcome, Scott.
Well, thank you so much, Keisha. I'm so happy to be here this morning. I want to thank you for inviting MTC Federal to come in and be a part of this. As Keisha said, my name is Scott Baker. I'm with MTC Federal Credit Union. I've been with MTC Federal now here in the upstate of South Carolina for the past 8 years, and am celebrating my 30th year in the credit union business. So this is something that I'm really passionate about and I love doing. So Keisha, thank you for giving me the opportunity. I also want to say, I want to start by saying a big thank you to everyone here on this webinar and affiliated with Infinite Possibilities. I was doing some research on your website, and I did not realize all of the wonderful work you guys do in our community. So hats off to all of you. Thank you very much. So this morning, we are going to be talking about understanding your credit score and how to manage your credit score. And we're going to kind of peel back the layers of that onion a little bit and talk about credit scores, how important they are, and basically how they work, right? That's been a mystery to a lot of people. And hopefully we're going to demystify that a little bit here this morning. This presentation will probably take, probably 30 minutes or so, and then we'll have plenty of time for some Q&A afterwards. I know when I give this presentation, that's usually the biggest portion of the presentation is just the questions and the answers. So looking forward to interacting with you all on that. So let's go ahead and get started. You should be able to see my screen. I'm hoping you can see my screen. Give me a second here to make sure I've got this working correctly. Okay, what we're going to cover today. We are going to talk about understanding your credit score, like I said, pulling back the layers of that onion. We're going to talk about also managing your finances and credit and how those two come together in your daily finances. We're going to talk about how your credit score impacts you. Credit is important in today's day and age, and understanding how your credit score works is probably one of the best tools you'll have as you venture out into the credit wilderness. And we're going to talk a little bit about the benefits of Credit Savvy from MTC Federal Credit Union and how, something like that can assist you in monitoring your credit, in staying on top of your credit, and managing your credit effectively. So let's talk for a minute about what is a credit score. The definition of a credit score is it is a 3-digit number, and I'm going to go off script here a little bit. It's a 3-digit number that predicts the likelihood of default on a loan within the first 120 days. So basically, it's a tool that tells a lender or a creditor what kind of a risk you are based on a whole lot of empirical data that's been collected by the credit repositories, of which we have 3 in the country. You may have heard these names as Equifax, TransUnion, and Experian. Those are data aggregators, is really what they are. They collect data. And in the past 20, 30 years or so, they've been using that data in the credit space very, very well. It is a good predictor, but it doesn't predict everything. But you need to understand what it is and how it works. Credit scores will range typically from a low of 300 to a high of 850. And they're categorized, as you'll see on the slide here, as poor, fair, good, very good, and exceptional. So the higher your credit score is, the less of a credit risk you are presenting to a potential lender. That's basically what a credit score is. But who uses credit scores? It used to be that only a creditor was using credit scores, but they have become such a widely accepted predictor of risk that many other agencies out there use credit and credit scores. For instance, auto insurance. If you go to get auto insurance, they're going to check your credit. They're going to see what your credit is like. If you go to rent an apartment, they are going to check your credit. Obviously, they want to see, how do you pay your bills, right? And that is going to determine what kind of service you may get from whoever you're talking to, be it a landlord or a utility company or an insurance company. So it's not just applying for a loan that is dependent on a credit score. It's a lot of the things that you can't really do without also rely on a credit score. So staying on top of it, knowing how to manage it is key. So let's talk for a couple of minutes about how your credit score is comprised, what makes it up, and what affects your credit score. So if you look at the wheel there in the chart that says FICO score, and we'll get into that FICO thing in just a few minutes. But as you can see in the lower left-hand quadrant of that wheel, 35% of your credit is based on your payment history. And when I say payment history, I'm really talking about paying your debts on time. 35% of your total score is comprised of that particular segment, paying your bills on time. The next factor that is weighted in your credit score is the amount of credit you owe, and that is weighted at 30% of your score. So just between those 2 items right there, that is 65% of your credit score makeup, paying bills on time and how much credit you actually owe. And this is really looking at your credit card debt for this, how much you owe. It's looking at your limits compared to the balances on all of your credit card accounts. These are revolving accounts, right? So, you know, a credit card, you use a credit card, you pay it down, you use it again, so on and so forth. But that's a great predictor of risk that they found over time. So you want to keep your credit balances on your credit cards significantly below your credit limits, okay? I know sometimes that's hard to do. Life happens, right? We have a saying here at NTC Federal that bad things happen to good people, right? It happens all the time. So make sure you just control your revolving spending, your credit card spending. And we're going to talk a little more about that in a few minutes. And then the next metric is at 15% of your credit score makeup, and that's your length of credit history. I like to look at it as credit seasoning, right? The longer your credit has been established, the more time there's been to pay your debts back on time, right? You've got a longer history, so the data that the credit score is using in its computation is going to be even more correct, right? It's going to be a better predictor, right? So the longer you have credit in force, really, the better your credit score can work for you. And then finally, the last 2 metrics that make up your credit score are your credit mix, right? That accounts for 10% of your overall score. The scoring system likes to see a good mix of credit, and there's really 3 kinds of credit. There is installment debt, right? Those are things like car loans, or personal loans, unsecured that have a fixed term and a fixed payment. Those are called installment loans. And then you have revolving credit, right, which is your credit cards and things like that. And then you have your other unsecured loans and so forth. So having that mix of credit is going to help you. So if someone has a credit file and they only have credit cards in that credit file, they're losing out on their credit score because they have a high risk form of lending instrument in their profile and nothing else. So again, that's why that's important. And then lastly, we're going to get down to new credit. Okay. Applying for credit is not a bad thing, but applying for credit numerous times within a short period of time can be very detrimental to your credit score. To creditors, it's a sign that something major is going on. If you're out shopping for credit religiously, it's a sign something's happening. So again, just watch out applying for credit. Usually, 3 to 4 credit inquiries a year is considered normal. Anything above that, you'd really want to look at. So why is your credit score important? Well, we talked about some of it earlier, but it does impact your loan approvals, and it impacts your interest rate that you pay for a loan. You can have a poor credit score and still get a loan. The issue is that the higher risk you pose to a lender, the higher interest rate they're going to charge you for a loan. So if you've got a credit score that is down in what we would call the subprime area, say in the 500s, you can still get a loan, but you are going to pay much more for that loan in interest than somebody getting the same loan that has a better credit rating. And I'm gonna show you how those numbers work out here in just a minute. Credit's also important because again, if you need to get housing, you need utilities, you need transportation, things like that, you're going to have credit to be able to obtain those things. Again, it can influence your insurance premiums. If insurance companies pull your credit and they see that you're having trouble managing your credit and managing your finances, they are going to consider that a higher risk. And they're going to charge you more for your premium. So there's an example there on number 4 on the slide. Higher score equals lower cost of borrowing. It's that simple. So let me show you what I mean. This chart, we call it pays to have a good score, a good credit score. I love this chart because it really, really points out why your credit score is so important to you, not just from philosophical reasons, but from a hard money cost perspective. So if we look at this chart, this is an example of a car loan, a $40,000 car loan for a 72-month or a 6-year term. And it's the exact same loan, but it's broken out in different ways based on where your credit score lands. So let's say for instance, let's just say my credit score is 675, okay? And I want to apply for a car loan. If you look at the chart here and you go down under the score heading and you see that range between 640 and 679, okay, that's where I would fall in this matrix. And it says in the interest rate column that my rate for that loan is 12.45%. They're going to make me the loan. I'm going to get my car, but I am going to pay 12.45% as interest. That's the cost for me to borrow that money. Okay. So compare that to the person who has very good credit. Okay. Let's say over a 730 credit score. Okay. That person is getting the same loan and they're paying 5.95%. That's a lot less than the 12.45% that I'm going to pay. And you can see over at the right, it says that the total interest paid for that loan for me at a 675 credit score would be $12,712. If I keep this loan for a full 72 months at a 675 credit score, it's going to cost me $12,712 in interest over that period to borrow $40,000. Now compare that to the person who has a 730 and above credit score. Their interest paid is $7,749. So I'm paying roughly $5,000 more for the same car because my credit score is not as good. So that is really, in a nutshell, why your score is so important. You can get credit with a low score, but be wary because you are going to pay for it. Next, let's talk quickly about how to manage your credit score. Well, let's go back to that wheel, right, that we were just looking at. 35% of your credit score is timely payments. Pay your debts on time. If you cannot pay your debts on time, don't despair. Don't crawl under a rock and hide or pull the covers up over your head and think it's going to go away. Work with your creditors. Work with your creditors. The last thing your creditors want to do is take a loss or repossess a car or anything like that. Their business is lending money, not selling cars that they've had to repossess. Pay your bills on time. Reach out to your creditors. More times than not, they are going to be willing to sit down and work with you. Secondly, keep your balances on your credit cards low. Try to remain under 30% of your limits. It's very important. If you get over 30%, that really does start to impact your credit score. And this goes back to the availability of credit that you have. If you're maxed out on all your credit lines, that doesn't look good to a creditor, and it does impact your score negatively. So pay attention to your revolving accounts. Avoid too many credit applications. Especially I find this around the holidays. As you're out shopping, I know like Kohl's, if anybody shops at Kohl's, they're really big on this. The end of the year, or really anytime really, but you're shopping and it's, oh, would you like to save 10% today by opening up a Kohl's charge or a Macy's charge or whatever it might be? Think twice about doing that, okay? Because those credit accounts add up. And if you're opening 2 or 3 or 4 within, let's say, a 1-month period, that is going to impact your credit score. A credit inquiry or a new account here or there is fine. Like I said earlier, 2 to 4 a year is considered normal. If you're inquiring for credit more than that, then you want to be careful. You want to be careful with that. Another thing I want to say on that is that if any of you have bought a car recently, you know what that experience is like. You go into the dealership. Well, as soon as you go into that dealership and you sign whatever you sign, they're going to pull your credit. But not only are they going to pull your credit, they're going to shotgun your application out to about 5 or 6 different lenders, and you are going to have several inquiries on your credit file, which would impact your credit score negatively. But the credit bureaus came together many years ago, saw that that was happening and the impact it was having. So just be wary now. If you go out car shopping or you go home shopping, your credit's going to be pulled several times. But what the credit report bureaus have done is they've taken those several inquiries, and any of them that are for the purpose of buying a car or buying a home, they condense those down into one. So you may have 13 credit reports pulled during the month on you because you're looking for the best car deal you can find. But as far as the credit reports go, it's only going to count as one inquiry. I've had people ask about that before, so I wanted to make sure I covered that. And you know what? Review your credit report regularly, okay? We're going to talk about some myths out there in a few minutes about checking your credit. You can check your credit report without it harming you, and we're going to talk about that. And build your credit history with responsible use. Probably one of the most practical pieces of advice that I've given people over the years is don't impulse buy. Take a little time to think about it. If you're looking at making a purchase and it's going to require you to obtain credit or use a credit card to make that purchase, ask yourself, is this something I really need at the moment? Is this something that I can do without for a while? And a lot of times you'll find that, whichever shoulder the angel is on usually wins out there. So just make sure that you're using credit responsibly. Now, how can you improve your credit score and keep it high? Well, there's a few things here you can do. If you're like me, don't rely on your memory, okay? Because you're going to forget. Set up auto pays. Set up auto pays. If your banking platform has the ability, set up auto payments on your credit accounts. That way you can set it and forget it. If you can't set up auto pay, set up reminders. Send yourself an email reminder or something, set up on a regular basis. If your car payment is due on the 15th of the month, well, maybe on the 10th of the month, you just set yourself a reminder, say, hey, don't forget your car payment is due. Reduce your debt strategically, okay? Especially when it comes to interest rates. You want to look and see what items of debt or what credit accounts am I paying the most amount of interest on? And it makes sense to try and wipe those out first. You want to keep older accounts open, okay? Because again, we go back to that length of time that your credit has been established. If you've got a credit account on there, like from, let's say, J.C. Penney from back in, you opened it, let's say back in 2000, okay? That thing's 26 years old. Don't close it. Even if you're not using it, try not to close it, because that keeps your credit file date further back and it boosts your score and makes it higher. So mix types of credit responsibly. You know, like I said, you do not want your credit file heavy with a bunch of revolving debt. You want to make sure you've got some installment loans, some revolving loans, and things like that out there. And again, monitor that score regularly. It's so important that you know what is in your credit file. Now, here's some common myths. Myth number one, checking my score hurts. That is false. Checking your score does not hurt. I've said that about 5 times now, so I think you probably understand that you can check your credit and your score. Closing credit cards helps. That's not always true. In the example I just gave, you know, if you close the oldest trade you've got in your credit file, you're hurting yourself. And another myth, carrying a balance helps. No, that's not always true. I have had several members come to me and ask, you know, they're in a credit bind and we're trying to work something out. I say, oh, well, the last place I went told me I can get a credit card and I had to use it. No, not necessarily. Okay. Use it responsibly. Okay. Just carrying a balance for the sake of carrying a balance does not help. The next thing I want to talk about, I got ahead of myself there. When it comes to checking your credit report, there's a website that you can go to out there that is called annualcreditreport.com. Again, that's annualcreditreport.com. You can check your credit report from each of the bureaus once per year for free. So here's what I recommend doing. Since you get a freebie and with each bureau, and there's 3 of them, every 4 months, reach out to annualcreditreport.com and have your credit pulled from Bureau 1. 4 months later, go back and pull from Bureau 2. 4 months later, go back and pull from Bureau 3. Look at your credit trades. Make sure everything on there is correct. If you see something that doesn't line up or you don't remember what it is, it's time to investigate. Next thing I'd like to talk about is, you know, how do you stay on top of your finances? How do you stay on top of this stuff? Well, if you're a member at NTC Federal Credit Union, we have a wonderful product called Credit Savvy, and it's free. It costs absolutely nothing as long as you have our digital banking platform. And if you're a member, that's what you get. Some of the features with this, you can track your credit score in real time. I love this tool because at any time when I log into my online banking, the first thing that pops up is my Credit Savvy and my credit score, and it tells me what my credit score is. You can get personalized tips to improve your score. It will allow you to set goals and track your progress to your goals. You can set up alerts for credit changes, or if something that doesn't look right is appearing in your credit file, you can get alerts that will bring that to your attention. And it's easy to use. It's right inside our online banking app. Folks, I strongly recommend, if you are a member at NTC Federal Credit Union and you don't know about this, we need to talk immediately. If you're not a member of NTC Federal Credit Union, and maybe you're looking to change your banking provider, give us a look. Go to our website, ntcfederal.com. There's a lot of good resources out there, a lot of good things that can help you out when it comes to your credit and your finances. More benefits of using Credit Savvy. Well, it's staying informed, right? And if you're informed, you're in control. It's when you're not informed that you're not in control and your credit score is running your life. It's managing your life. You should be managing your credit score. Again, we talked about alerts. We talked about managing your finances. And obviously, it's all in alignment with our mission at NTC Federal, which is working hard for hardworking people. We try to make things as easy as we can. So next steps. NTC Federal, we're here to help, guys. Working hard for hardworking people. That's been our motto for 50 years now. We are celebrating our 50th year in business, August of this year, and we cannot wait for that. Become a member with us. See what we have to offer. Sign up for our digital banking and activate Credit Savvy. Like I said, it's free. Take control of your own journey. That's what it's really all about. Owning your own financial makeup and your own budget and managing for success, right? And we're here to support you for that success. Another thing that I want to mention before we wrap up here, and I look in the chat to see what kind of questions we have, is what if you can't fix your credit score? What if you tried everything, or what if it just feels too overwhelming? You know, and which it can. This can feel very overwhelming. We have partnered with an institution called GreenPath. You can find it on our website under resources. GreenPath Financial Services is a wonderful institution. They're a not-for-profit, and they are there to help you, okay? If you are having problems managing your debt, they will assist you in managing your debt, including if you have a debt with NTC Federal. They will also help you on improving your credit as well. If you are having trouble creating a plan, you can get a hold of GreenPath and they will help you. Or you can come to us directly, okay? And we're more than happy to help you with that and set you on the right track. That's pretty much what I have for my presentation at this point. If you'll see on the slide there, there's a QR code. If you'd like to scan that, feel free to. That'll take you right to our website. Again, lots of useful information out there. If you're not a member, or if you are, check out that resources tab. Lots of things there that can help you out. So I am going to try to go back and look at some questions here and see what I can find. Let's see. If our credit score is low, can we get a mortgage? And what is the best way to go about this? That is a great question. Know your score before you apply. Okay, know your score before you apply. If you are affiliated with a financial institution such as a credit union or a bank, and you've taken out recent loans with that institution, and you don't remember what your credit score is, call them up. Call them up and ask them what your credit score was. At annualcreditreport.com, you can get your credit score. Now, that piece you will have to pay for. And I do not know what they charge for that. I apologize. Your credit report is free, but your score does cost money. Know your score. Partner with a trusted mortgage loan originator, right? A mortgage loan originator is the person who has the conversation with you, gathers all the information, and presents your loan to the underwriters for approval. Form a good relationship. They are very good at telling you, based on what kind of mortgage you want to get and how big of a mortgage you want to get, how to work on your credit to get where you need to be. I would say another thing you can do is, if you have credit card debt and you want to apply for a mortgage, you need to work on getting that credit card debt paid down before you apply in a good scenario. Because your revolving debt impacts your credit score very, very quickly. I share this with people because I think it's extremely important. If you take what you owe on your credit cards and divide that by the limits on your credit cards, that is going to give you a utilization percentage, okay? So if, let's just say I have 5 credit cards and I owe $10,000 in balances on those credit cards, and I have a total of $20,000 in limits, okay? So I have utilized 50% of my credit. I've used 50%. Now, if I want to improve my credit, basically speaking here, or generally speaking, 1% of availability gained in your credit usage is equivalent to about 1 point on your credit score. So in my scenario, if I have $20,000 in limits and I have $10,000 in balances, if I pay off that $10,000, if I'm able to pay it up or pay it off or pay it down, for every percentage I decrease that, my credit score is going to go up about a point. So if I can eliminate all of that $10,000 in debt, I'm going to gain that. I've just wiped out 50% of my debt. My credit score is going to go up about 50 points. So that is one way you can definitely manage your credit score, especially if you're looking to make a big purchase and you want to pay as little as you can for it. Okay, let's see here. We have several questions. Okay, does having multiple store credit cards affect your credit? Yes, it could. Having multiple revolving store charge accounts can affect it because it's looking at your credit mix, right? Now, if you've got some car loan or two sprinkled in there or a mortgage loan or something like that, it's not going to be as bad. But if all you have are credit cards in your credit file, yes, that is going to negatively impact your credit. What if I make several purchases on a 12-month interest-free installment plan using my credit card? Well, a couple of things there. First of all, anything you can do interest-free, do it. Do it. Free money is the best money you can get, okay? But make sure you understand the terms and conditions of the contract you're getting into, okay? Some of these will have interest that continues to accrue, and if you don't pay it off, by that final date, well, now you're responsible for paying all that interest that you didn't have to pay before. So, yeah, free money is great money. Just make sure you're paying attention and you don't go beyond the what that contract states. And does that affect your credit score? Well, anytime you open a new credit account, it impacts your credit score, okay? Anytime that someone makes an inquiry or pulls your credit, that's called a hard inquiry. It will affect your credit score. Not tremendously, but it will affect it. When it does get to be a much bigger impact is when you're opening multiple lines of credit within a short period of time. You definitely want to stay away from that. I hope that I'm answering all these questions correctly. Let's see what else we got here. That is about all I see. Does anybody else have any questions that they'd like to enter into the chat? I am coming back down here. Let's see. All right, I think that's about all I see. Keisha, if there aren't any more questions, I'd be happy to take more, but I'm going to leave it up to you.
All right, thank you so much. This was great information. Thanks again for joining us. I've actually been taking notes myself, some things that I needed to learn as well. So thank
Well,
you for that.
good.
Yes.
Absolutely. It's my pleasure to do it.
Yes, absolutely. So, okay. So everyone, I just want to check in. Does anybody have anything they would like to ask about the presentation or just anything coming up? I just want to make sure everyone heard me about the culinary summer camp at Greenville Tech, and I've put that information in the chat. I'll post it. It's kind of up at the top. I'm going to send it again. I'm going to put this down and just want to make sure that everyone has place their name on the sign-in form as well. So, okay, I'm going to open it up. If anyone wants to unmute yourselves and ask any questions, please feel free. All right. Okay, well, our next meeting will be on May 20th, and it will be several community resource presenters. So keep in touch with us. Follow us on social media. We're on Instagram. YouTube is where all these meeting recordings are in Spanish and English. We're on Facebook and TikTok as well. So just keep up with our upcoming events, and we look forward to seeing you next month. Have a good night. Well, actually, good day. Bye.